The number one reason most traders think they're ready to trade with real capital is because they have made some fictitious money trading in a simulated environment. This is wrong. Now in this video, what I'm going to do is I'm going to showcase to you what data you should be focusing on that tells you when you should make the transition from sim to live. More importantly, we're going to cover the risks that come with staying in a simulated environment for too long. Now, many of the Tradelo traders have conducted one-to-one mentoring sessions with me, and the question that comes up more often than not is when should they move from sim to live? Now, the reality is that most traders I mentor are confused about making this transition, and typically they want to have some track record to lean on. Now, unfortunately, track record is only one piece of the puzzle. So why is this the wrong data point? Well, performance is a misleading indicator at the end of the day, and it's very easily manipulated and short-sighted. You can have the wrong trade ideas and make money, or you can do the right trades and lose money. If you're basing your decision on going live simply based on outcomes, more often than not, you won't be ready to start trading with live capital. So what is the right data point? Well, it comes down to one word: consistency. Consistency in making decisions, consistency in applying risk management, consistency in taking big enough winners on your trades. Now, whilst the primary objective of a trader is to make money, you first need to learn the skill of consistently applying yourself. Otherwise, it will be impossible to make money in the long run. Now, inside the Tradelo application, we have a simulator challenge that our members will use to determine when they should go live. And the purpose of the simulation is simply just to determine if you are sufficiently consistent. If you can pass this test, it means that you're making consistent decisions in your trading for a sufficient period of time to move out of a simulated environment and into a live environment. Now, not all of you will have access to the simulated challenge because not all of you are members of the Tradelo application. But there are three key data points that you can observe, and they will tell you when you should make that transition. Firstly, trade frequency. Get up an Excel document, make sure you look at the last 50 trades, ideally 50 because that is a sufficient sample size. If you haven't done 50, do more trades before making that move to real money. Now, go and calculate the profit factor for those last 50 trades. Now, obviously, if you've done 100 trades, you're always looking back at the last 50 trades. You don't need to look at the entire sample set. And make sure that that profit factor is greater than 1. Why? Well, because with a profit factor of 1, it means you will be making just as much money on average that you're losing. And this means that your account balance won't suffer a setback when you move into a live environment. And importantly, you'll gain the key experience of live market conditions. That's the second data point. The third data point then is what we call the risk management ratio. Now, all we're looking for on this is that 20% of your trades, so 20% of those 50 trades, those last 50 trades, they should have at least a more than 2-to-1 risk reward. Why? Well, because this is you showcasing that ability to make some money on some trades. Okay, very, very important. It doesn't have to be an average risk reward. Average risk reward is not as important as being able to make some risk reward on at least 20% of your trades. Okay, combined, if you take these three statistics, if your profit factor is greater than 1 and you've done more than 50 trades and you've got an RR at least greater than 2-to-1 for 20% of your trades, then you are ready and you must move from a simulated environment into a live environment. Now, having these three successful data points, does that mean you'll be profitable? Absolutely not. Okay, but our objective at this point is not to be profitable, it's to be consistent. Because if we are consistent, we will by definition become profitable in time. And if you can wrap your head around this fundamental concept, you are very much ahead of 90% of other traders that are just so fixated on outcomes like P&L. Now, how does it make sense to go live before you're making money? Well, let me explain to you. There is a significant risk of being on a simulated environment for too long. Let's go through those risks. Number one, bad habits. If you sit in a sim environment for too long, traders will take the risks ultimately in the sim environment that they wouldn't normally take in a live trading environment. Okay, the reality is you become bored in a simulated environment after a period of time because there's nothing on the line. Things like over-leveraging, ignoring stop losses, revenge trading, over-trading, doing swing trades, moving away from scalping to suddenly holding trades for longer, but doing overnight trades, scalp trades. You change your style. All these sorts of bad habits become apparent if you sit on the sim for too long because there's nothing on the line. More importantly, the second risk, heightened expectations. Okay, traders who spend too much time in a simulation think their strategy is more profitable than it really is because they don't account for the real costs of live trading. Things like commission, things like data fees, things like, holding trades to target. All these sorts of psychological costs and expenses come to fore once you move into a live environment. Okay. The third risk, improper risk management. Without the impact of real losses, traders don't fully respect risk management principles. Okay. So often I see traders start in a sim environment. The broker gives them a nice $100,000 balance to play around with. They trade full contracts, and then all of a sudden, when they go live in a real money market environment, they're trading with $1,000 account. Okay. And then they wonder why they blow out their account. Okay. The reality is that unfortunately, sim environments do expose you to improper risk management practices. Okay. Then fourth, missed learning from real losses. Okay. The reality is that the biggest and most important lessons you'll ever learn in your trading career won't come on a simulator. They'll come in a live environment. Why? Because real money teaches critical lessons about emotional control, market behavior, risk management, psychological control. At the end of the day, the most painful lessons are the ones you're going to remember the most. Okay, so we don't want to sit on a sim environment for too long because we're giving up that opportunity to learn those lessons. Now, the live market will teach you some key things, and this is again why it's very crucial to get a trader transitioning from sim to live once the data suggests. Okay, in a live environment, ultimately there is an impact of real money. Okay, and trading live introduces real money pressure and emotion, and this is a skill that you have to develop. Okay, it cannot be developed in a sim environment because it doesn't exist. Things like revenge trading, tilting, chasing trades, overtrading, stopping when you're hitting a daily loss, holding trades to real money targets. All of these sorts of skills you'll only ever learn in a live environment, and that's why we have to get you there as quick as possible. Second, psychology. Once there's money on the line and you know that a mistake can cost you hard-earned dollars, at the end of the day, a simulation can never replicate this. Okay, you can only experience and learn these things and start to understand what goes on in your internal mind when there's real money on the line. At the end of the day, pressure unlocks new perspective, and that's why we have to get you into that live market environment. The third reason we want to get you into the live market environment is because of real market execution. Okay, things like slippage, order fills, whether it's entry exits. The live market just has a different fill system, liquidity system. It's different. Okay, and you need to learn that difference and understand that difference and how it impacts your trade strategy. And then finally, commissions. This is something you will never understand in a simulated environment, and you'll quickly understand it in a live environment. There are things like commissions, transaction fees, spreads. At the end of the day, these are real costs that directly impact your profits, and they impact you even more as you make that early transition from simulated to live, because perhaps you will be trading micros, and there you don't get to keep a great deal of your money when trading micros. Okay. So those are the four reasons ultimately why we have to move you out of sim into live as quick as possible. Now, simulated trading is very, very important for building skills. Okay, it's important for learning strategies, testing setups, understanding, ultimately how the foundational things of the market work. But ultimately, the live environment teaches you how to manage your emotional, psychological, and the practical challenges that come with real-world trading. Okay, the true test will come when your decisions are influenced by the presence of real money being at risk. Okay. The transition from sim to live is where you will gain the experience needed to refine your strategies and build resilience under real market conditions. You don't need to perfect your strategies in a simulation. That's not the purpose of simulation. The purpose of the simulation is simply to get you building the foundational blocks, to get you to understand the process you need to repeat in order to become consistent over time. That is the key to the simulated environment, and that's why we lean on those 3 data points. Now, When I started trading, you typically stayed in a sim environment for 6 to 12 months because the costs involved back then were significantly higher. We didn't have micro lots. We could only trade the full contracts. Okay, now very, very important. We do transition our traders at Tradelo 2 to 4 months from a sim to a live environment. And this, of course, does depend on the process they adopt. But the Tradelo application has got the full set of processes and methodologies traders need to become consistent. Okay, that is what the Tradelo application has been built for. It's to enable you as the trader to steepen your learning curve, to get into that live environment as quick as you can, but more importantly, to safeguard your resources, including time and capital, as we transition you through the different phases. Okay. Moreover, of course, we do give one-to-one mentoring sessions with our traders, and that is to very much safeguard the trader early on in their journey, and to ensure that they're only going live once the data suggests so. Okay, we really do want to safeguard traders, particularly at the early onset of their career, because if they can get past the first 8 to 12 months, the probability and the odds of succeeding increase exponentially.